So the market is showing us that greed and over-leveraged retail traders will get slaughtered in the raging bull market. Now, we do want the leverage to be removed in the bull market because that's what makes for a healthy market structure, right? But if you understand the market structure, you'll also understand that we're about to hit a period where some people will become absolute millionaires, and where inexperienced traders are going to become like meat for the predators. Yeah, they're going to become meat for the predators. What do you mean you're vegan? Vegan. Okay, so they're going to become like lettuce for the bunny. Yeah. So today I'm going to show you the difference between the meat for the predators or the lettuce for the bunny, and those guys are going to become millionaires because it all comes down to a couple of indicators. I'm going to show you that. Let's do it. Welcome back, Banter fam. I'm Crypto Man Run. I'm here twice a day, every single day, in the bull market, in the bear market, bringing you crypto love and crypto wisdom, and building what YouTube tell us is the most loyal community on YouTube, the most profitable and the most loyal community on YouTube. You know, because of you guys, we are now the #1 and #2 live shows in the world. So sometimes it's this show and sometimes it's Sheldon's show, but either way, Crypto Banter is now the biggest live show in the world. So well done, guys, and thank you for your support. And we intend to keep making this family life-changing money. So if you are new to our channel, guess what? You finally arrived in the right place, the place where we are going to change your life and make sure that you never have to work shifts ever again. And we're going to do this not only by teaching you the market cycle and teaching you what indicators to look for, we also have a whole lot of giveaways that we're giving our community, including the biggest giveaway in crypto history. Yeah, you heard right. The Banter Bags is back. Banter Bags 2 is here. This time, we're going to give away millions and millions and millions of dollars in the Banter Bags 2. We've got like the Banter Bags like sign. So the Banter Bags is back. When we get to 700,000 subscribers, we're going to give away the Banter Bags. Let me tell you how this works, just to be fair. We are going to get pre-market IDO allocations of tokens for you guys. They're all going to be unlocked tokens, unlike the last time. So when we've got the tokens, we've got the tokens. We are going to fill those bags up until we get to 700,000 subscribers. When we get to 700,000 subscribers, we are going to give away the Banter Bags to members of the community. Now, before, we just gave it away ad hoc, and a lot of people complained. So we said this time, 50% of those are going to be given away on the live stream. So the live people, we're going to change their lives first. Then the other 50% is going to be split between people who watch later and people who are on Twitter and some good causes, because, you know, we love a good soppy story. So we'll give away some of those to those people. There's also another giveaway today. So Banter Bags is coming back. It's going to be the biggest giveaway in crypto history. That I guarantee you. Okay, I told you last time we gave away over $2.5 million. And I think this one's going to be like $20 million. I think it's going to be 20. I think just Monkey Ball, you take Monkey Ball going to do 100x. They gave us $1,000. That is $100,000. So $100,000, Monkey Ball, plus we can have about 25 million other bags. We're going to make, it's going to be Brazil. We're going to give away Brazilians, just millions and Brazilians. What else? There is another giveaway today in the description link of the show, and that is for this project on SolRaiser. It's the first project that we're supporting on SolRaiser. It's called xHashtag, and xHashtag is a metaverse NFT marketing project, and effectively they are giving away places in their IDO, so whitelisted places in the IDO. If you want those, there is a link below. Go and fill out the link below. Go and follow all the instructions, and then you're going to get a chance to win. You're going to get a chance to win, and this IDO actually happens next week. So more money to the Banter family, more money to the Banter family. And remember, if you missed our party in Lisbon and you didn't dance with us in Lisbon, you really did miss out. You really, really, really did miss out. I want to show you one or two more scenes for those of you who... So if you missed that party, we do have another party happening in Miami. So if you want to join us in Miami, we're going to be there for Art Basel, and we're going to be there for DecentralCon. And if you want tickets for DecentralCon, we are giving our subscribers 40% off tickets. There is a link in the description there. If you want to join us. It's going to be amazing. And then we're going to do a huge banter meetup and a huge banter after party, and party it up with the people in Miami. Shaldino's coming. I'm going to be there. Freddie's going to be there. I don't know, Jimmy, are you going to be there? Let's just get Jimmy on the line here. Jimmy, are you going to be there?
Am I invited?
Only if you do the eyebrow thing, bro.
Okay, I'm done for now. I'm retired, thank you.
Oh, you're retired, okay. Well then, no Miami for Jimmy, no Miami for Jimmy. Alrighty. Let's get into the big story of the day. And I guess everybody today is talking about, well, I guess none other than the price, because a lot of people are starting to panic. Oh my goodness, what is happening with the price? How can Bitcoin go down to $60,000 after being at an all-time high of like $66,000? How could this happen that Bitcoin goes down 10%? And what does it actually mean? Does it mean that we've actually broken the market structure? Does it mean that Plan B's entire forecast or model that Bitcoin is going to hit $100,000 by the end of November? Does that mean that the whole model is completely invalidated? Or are we actually looking at the wrong indicator? And that's really what we should be looking at today, because I think that leverage shakeouts in a market are very, very, very healthy. And we need them. We need leverage shakeouts, because the more leverage shakeouts that we have in the market, the more we create a sustainable market. You can't have a market where the leverage keeps increasing and increasing and increasing. And you need to shake out the leverage, because that is what creates a healthy market cycle that can continue to go up. A market cannot continue to go up on leverage alone. And we can see that if we look at the historical leverage charts, and it's pretty easy to look at them. Every single time that leverage has hit a high, the price collapses and the leverage collapses with it. Here we go. There's a higher high there, if you want to call it that. There's a lower high here. Bang, there's a collapse. Here again. And we go up and up and up. And every time that we get to a point where there's too much leverage, the price goes down. Let me just zoom out for you guys, just so that you can see it. High leverage, price drops, leverage drops. Price drops, leverage drops. High leverage, price drops. High leverage, price drops. High leverage, price drops. Why is this happening? Why is this happening right now? I'll explain to you why it's happening right now. Because we're in a very delicate phase. We're walking like this delicate line. On the one hand, we are trying to get, or we are getting, as much money into retail as possible. Okay, and the money that's coming into retail, well, let's say that it's not the smartest money in the world. It's retail investors who are coming into crypto, and they're coming into crypto because crypto is the one place that you can make millions. You put in $10,000, and within 2 weeks, it can be worth $20,000. Not like the stock market, where you put in $10,000 and you have to wait 5 years for the $10,000 to become $20,000. In crypto, it can happen in a week. And if you hit the right shitcoin, you can do 100x in a month. And those kind of returns don't exist in traditional markets. So we live in this la-la land, in this bubble that we call crypto. And people come into this bubble because we tell them how much money we've made, or they see how much money we've made. They see how much people in crypto are getting financial freedom. And they're saying, we want it. We want into this market. We want financial freedom. We want to make a whole lot of money on our market. And they come in not knowing anything about the technology. Zero, they know nothing about the technology. And they expect to make their millions. And that's excusable. That's forgivable. Because the truth is, we all came here for the profits. Don't bullshit yourself that you heard about this amazing technology, which was decentralized money or decentralized smart contracts without government, and you fell in love with the technology. Bullshit. You fell in love with the returns like everyone else did. I'll admit it, I'm the same. We fell in love with the returns, and we came into this market chasing the returns, and then we fell in love with the technology. We came here for the returns, and then we got absorbed into how incredible this technology was. It happens to everyone. And that's why we like the fact that prices increase. The fact that prices increasing is amazing for us because that creates attention to this new technology called blockchain. Price is an amazing lure for people to come into the market and invest into the market and help grow this technology. But price is the wrong indicator to be looking at if you are an investor and a believer in the space. Mark Yusko actually came out a while back. It's an old interview with him. But if I remember correctly, let me just see if I can find that for you guys. He says, volatility is simply an indication of uncertainty and disagreement on long-term prospects for an innovation, idea, project, or company. When you've done work to gain better understanding of fundamental reasons for long-term success, you have an edge. You have an edge, and you therefore have an edge on all these retail investors. If you've come here and you've done all the research and you've looked at all the fundamentals and you're not just looking at price, then you have an edge over the retail investor, which is going to come here and they're going to get slaughtered. It's like meat for the predators or like lettuce for the bunny, right? So they are going to get slaughtered because they don't have the edge, because they haven't done the fundamental investment. Now, if you do have an edge, then you don't have lettuce hands or spinach hands. And you're confident in your conviction. And so what you do is you know when to buy and when to sell. And you do this by looking at all the indicators. In fact, you look at all the indicators. The last indicator which we look at is actually price. Because price is a very, very, very deceiving indicator. It is the last indicator we should be looking at. So if price is the last indicator that we should be looking at, then what are the indicators that I'm looking at right now which make me feel so calm? Why am I not worried about this dip at all? And let me tell you, I'm not worried about this dip at all. And it's not because I've been drinking tequila. Promise you that. It's not because I've taken Xanax. It is because I've been here before and I know which indicators to look at. It's all about choosing the right indicators to make your investment decisions. Now, the fool starts off at the end. The smart guys start off at the beginning. So you need to understand where the end is and where the beginning is. So let's work backwards. If the end is price, price is the fool's matrix, the fool's indicator. If you are trading on price, if you are buying a token because the price is going up, then you are a fool because that is the last indicator. Price moves last. And a lot of people come in here and they invest in tokens because the price is going up. A lot of people come in here, they look at Bitcoin and they buy Bitcoin and they take leverage on Bitcoin here. Why? What is this green candle over here? It is people riding the price wave, taking leverage on the price wave. That is this leverage over here, taking leverage on the price wave. It's idiots, it's fools, because if you are trading on price, you are going to get wrecked. You are the lettuce for the bunny. I'm not allowed to say meat for the predator because people are vegans, okay? You are the lettuce for the bunny. But it doesn't sound the same. It doesn't sound the same. It's got to say meat for the predator. Much more, it feels more. Will you let me do it? Okay, so you can be lettuce for the bunny or if you are trading price. Price is the worst indicator to be trading. In fact, you want to be a good trader, you want to be a good investor, let me give you the best suggestion in the world. Do not look at price. Don't look at price. You don't care about the price. Because price is an indicator of what retail are doing, and you don't give a shit what retail are doing. Start looking at other indicators. Do not look at price. It's the same reason why I said to you guys a few days ago that my cashometer was at 25%. Remember I spoke about my cashometer? My cashometer is at 25%. And if I look at my cashometer today, okay, my cashometer today is at, ta-da, 25%. That means I haven't deployed 1 cent in this market. And you ask yourself, okay, why haven't you deployed 1 cent into this market? The price has gone down. The price, in fact, has gone down from 69,000 all the way down to 58,000 and back up to 60,000. Why have you not deployed any money? The price has come down. Because price is a fool's indicator. Everyone is going to get fooled by price. But I'm looking at indicators which are much, 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 much deeper than price. Let me show you some of the indicators that I'm looking at, and then you'll understand why I haven't deployed money yet. Okay? Let me show you the first indicator that I'm looking at. The first indicator that I'm looking at is leverage. Where is the leverage? That's the indicator. Leverage is at an all-time high. I dig into leverage, and I see that this price has shaken off a little bit of the leverage, but leverage is higher than it's ever been. Not than it's been recently, than it has been in the history of leverage. In the history of leverage, the leverage is still higher than it's been. Is that a market that you're comfortable to be buying into? No. Okay, good. So we're aligned. Okay, next, what am I looking at here? So Dylan Leclerc says, look, the market has shaken out the weekends, and he's looking at this by saying that the funding rates have actually started to go negative. When the funding rates have started to go negative, it means that the longs have been liquidated and that the shorts are now starting to accumulate. And he's saying that there actually has been a reset. He said leverage shakeout close to compete, and he's waiting for a bounce. And then Ched's comments and he says, due for a relief rally. I think that they may still be wrong, and I'll tell you why. Because the leverage is still too high for me. So I may miss some opportunities. I may be wrong. I may miss a bounce. But this indicator, which is not a fool's indicator, which is not the misleading indicator, which is price, is showing me that right now, this market is not in the safe zone for me to start buying. That's the first indicator that I look at. Let's look into the other indicators that I look at. I then shift my attention to fundamentals. And I say, okay, this market has come down. Okay, cool. Market's come down. What are the fundamentals? What's happening in the fundamentals? And then I dig through the whole of Twitter, and I look for every single story that I can find that may be a negative story and that may ruin my conviction in Bitcoin in the short term and in the long term. And what do I find? I find the following. The controversial Bitcoin tax provision bill passes with the infrastructure bill. This news is about 3 months old. We knew this infrastructure bill was going to be passed. We knew that crypto was one little drop in this infrastructure bill. What is everybody worried about? I'll tell you what everybody's worried about. I'll remind you what everybody's worried about. Even though we have seen this for months, it's the definition of a broker. Biden's Infrastructure Act and Jobs Act requires brokers to report trader information on transaction of more than $10,000 to the IRS. The problem here is how they determine broker. But the cryptocurrency community is more concerned about how the bill defines broker, because anybody who receives $10,000 from anybody else may be deemed a broker. So if you send me $10,000, then I may be deemed a broker. And if I don't report that transaction to the IRS, then I guess that there's huge implications of not doing that. But this is old news. It was passed yesterday. Yes, okay. But it's old news. And the IRS has even gone as far as to say that they are not going to enforce the law like that. They're going to treat a broker as a broker. Okay, next. The Twitter CFO, Ned Siegel, says, so listen to this, has a very different take on Bitcoin investment from the CEO, Jack Dorsey. That also came out in the news today. What he's saying is, it doesn't make sense right now to invest in Bitcoin. And why? Because Bitcoin is highly volatile. What is he talking about? Well, this comes down to the way that US firms have to account for Bitcoin purchases. If you're a US firm and you buy Bitcoin and you put Bitcoin on your balance sheet, like MicroStrategy did, like Michael Saylor did, and then the price of Bitcoin goes up, you are not considered to have made any extra profit. You cannot mark up those profits. But if Bitcoin goes down, then you got to mark down your investment and you got to treat that as a loss. So if you buy $1 million worth of Bitcoin and the price of Bitcoin halves, then in your profits, you have to deduct $500,000, which is bad because that makes your company look like it's unprofitable. And when they are reporting, when Twitter is reporting, he's kind of saying, look, Twitter prefers to hold comparatively stable assets like securities over highly volatile Bitcoin on its balance sheet, and to invest the company's money in crypto. So basically, what he's saying is it's nothing new. It's the way that we have to in the US account for these financials. Then the Chinese government is banning crypto mining again, because they only banned it last month and the month before and the month before. So they're banning crypto mining again. They're saying basically now that if you do want to mine, you're going to have punitive electricity charges in the future. Now that's quite weird. Why would a government that's banned mining say that if you do mine, it's banned, you will pay extra electricity? It's like saying, look, drugs, you're not allowed to sell drugs, but if you do sell drugs, then the price of your petrol is going to go up. I mean, it doesn't make sense. Anyway, for those of you who want to read the article, you go to Wu Blockchain. It's all there. And it is in beautiful Chinese. So I don't even know what it means. So then I look at the fundamentals. The fundamentals are telling me that absolutely nothing's happened. So that is the second indicator which I look at. Then, what other indicators am I looking at? I look at dominance. And I see whether people are starting to panic. Dominance is at 43.5. Dominance a month ago, was at 47.65. Dominance a week ago was at 44.63, before this all started. Dominance right now is at 43.5. What the market is telling me that people are not scared. That this price is not scared, that the whales are not scared. You see? So that's another one of the indicators that I'm looking at. I'm not looking at price. I can do this whole analysis and I can tell you what I'm buying and what I'm selling, and I'm not even looking at price. I never look at the price to decide whether I'm buying or selling, because price is a fool's indicator. Let me show you some more things. I look at the on-chain metrics. Those are the other indicators that I look at. And what are the on-chain metrics telling me? Well, they're telling me that the third biggest whale address in the world has added 207 Bitcoin to its wallet at a price of $62,000. Here's the address, and it shows that the whales are adding Bitcoin right now. That's what the on-chain data is showing me. The on-chain data is also showing me that long-term holders, the long-term holder supply indicates when a potential top might be in. We are nowhere near a potential top because the long-term holders distribute before the top, and you can see the chart goes over. You see how the chart goes up? Look where we are now relative to where the market cycle. There's still a whole long way to go. So that's another indicator. The on-chain indicators are showing me that whales are buying and that they are not distributing their products, their token. And if you overlay that against price and you say, okay, let's take that as a function of price. Long-term holders are distributing, but not at aggressive rates compared to the later phase of the bull market. This suggests the bull market may actually last into 2022. And he takes that information and he correlates that and he extrapolates that out, and he says that the top of the bull market should actually be somewhere in 2022. So the on-chain data is giving me only good signals. Okay, then more on-chain data. ETH. Let me show you ETH. Holy smokes. ETH free float on exchanges totally nuked from 11.9% to 10.2%. What does that mean? It means there is a dip and people are taking ETH off exchanges. There is a dip in the price and the smart money is buying it and taking it off exchanges and putting it into long-term custody, and you can say goodbye to those ETH. You'll never see those ETH ever again. So the on-chain indicators are all telling me that shit is good out there. Lex Moshkovsky says, funding and open interest perpetuals have decreased substantially, meaning that the market is healthy again. We may go lower, but chances are people will be waiting for significantly lower prices, will be left holding stablecoins. He's saying that the leverage is down enough for me to start getting back in. Let's look at what he's saying. He's saying the leverage is starting to close. This is the perpetuals. This is the rate of the funding rate of perpetuals. There's no more demand for money, okay? And the open interest is starting to decline. But I don't think that the open interest is declined enough. And that's why I'm deciding to sit on my hands as opposed to start buying. I may be wrong. I may be mistiming this market completely, but I'm waiting for panic. I'm waiting for that one day where the retail investors get completely flushed out and we start again. It happened in 2017 and it's going to happen again in 2021. In fact, let me show you what happened in 2017. I know we keep talking about this, but let's go back there. Let's go back on a daily chart. I love looking back at history, and especially when it's so perfect to the date with what's going on. And everyone's expecting a much longer bull cycle. All the smart money is expecting a much longer bull cycle. So there we go. On the 8th of November, we were at 7,900, and 5 days later, we were at 5,600, and 19 days later, we were at 13,500. That's what happened in 2017. Here is the leverage shakeout before the aggressive bull run. We haven't seen the aggressive shakeout yet. And so I think that the aggressive shakeout is going to come in the next 2 to 3 days. And then we're going to start climbing aggressively. And then we're going to start getting to all the levels where I'm comfortable to deploy my cash emitter. Until then, I'm not deploying 1 cent. I'm not deploying 1 cent out of my cash emitter because, again, I'm not looking at the price. I'm looking at every other indicator in the world. And the reason why I can do that is because I understand the market cycle. I've seen it before. I was here in 2017. I'm here again now. It's repeating itself. And anyone that was here in 2017 will tell you exactly the same story. So you're going to make a decision. If you're going to be like those retail investors and you're going to come in without any knowledge of the technology, that is forgivable. The part that is unforgivable is coming in here and investing money on leverage without understanding the market cycle. If you're looking at price and you're not looking at the other indicators, you don't understand the market cycle. And if you don't understand the market cycle and you're over leveraging yourself, then you deserve to become the lettuce for the bunny. You do. You deserve to be, fuck it. You do deserve to become the meat for the predator. I said it, okay? If you've been here for a while, you understand that market cycle and you know exactly when the right time to buy is. And I've been here. I've been here for a while and I've seen it. And I'll tell you, there's someone else who's been here for a while and he'll tell you exactly the same thing. In fact, let me get him on the line. Tech Dev, how are you, sir?
I'm doing great, Ran. How are you?
Fantastic, my friend. Fantastic, my friend. What do you think? Do you think that this leverage shakeout is the end of the crypto bull market? Or have you been here for long enough to know that this is just a healthy flush out of leverage?
Yeah. Well, first of all, thanks so much for having me on. No, it's certainly not the end of the bull market. You know, I have not been here, I don't think, as long as you and Sheldon. I got into crypto originally in 2017 and dove back in heavily once things woke up in 2020 and have spent the time since learning what exactly the Bitcoin market cycle is all about. And to be honest, this latest move is nothing unusual in my opinion. Yes, I think it's related to some leverage flush, but when you look at the larger trend, it is perfectly within expectations. And like you, I am expecting to see some strong upward movement pretty soon.
Okay, so walk us through the chart that you've got up on the screen, because you've posted this chart a few times on your Twitter in different shapes and forms. What are you looking at in this chart, and why are you so confident?
Sure. So I've posted bits of this chart before. This one in particular, I made up just this morning actually to demonstrate how I think we're still on track. And to me, what's been fascinating is over the Bitcoin market cycles, and right here I'm looking at the past 3 full market cycles. So this is every market cycle that has had a halving within it. You've got 2013, 2017, and 2021. I mean, yes, the cycles extended well before these 3 years, but these are just what I call the 3 cycles. And you see we have these key log-based Fibonacci levels. So these are fib extensions that are pulled from the previous cycle high to the current cycle low on a log scale. And Bitcoin tends to respect these pretty well because I think as you and a lot of your viewers know, it moves more logarithmically price-wise within time than it does linearly. So you have these 3 key levels. And the first one here is this 1272, which fascinatingly, even though you had about 1 million X difference in market cap between 2013 and 2017, it landed, again, these are 2-week candles. So this is a longer time frame view, but it landed on this level in July, all of the 3 past cycles, including this one. And that's when we had our first big shakeout. We had our push past the previous all-time high, and it came and it bounced off this 1272 level in July 2013, 17, 2021. And then you have this next one, this 1618, that in our current cycle in 2013, which I think we're mirroring more closely than the last one, that's where you saw your first big resistance, and it actually caused the pullback towards this 1272 in 2013 and 2021. 2017, we actually didn't have as steep of a run up, so we didn't interact with this 1618 until after the bounce off the 1272, but it still had an interaction there. And then in both of the previous 2 cycles, we ended up, after we broke past the 1618, we actually closed a 2-week candle above it. That's what led to the final run up to just over the 2.272, again, in both of the last full cycles. And right now we're sitting right around that level. We actually closed our first full week above it last week, and I am expecting that we will close the current 2-week candle above it, which closes on Sunday. If we do drop below it and we close below, that will start to tell me that, okay, maybe we're not quite as close to the final impulse as I thought we were, but there's nothing to suggest that yet. I think we're back above 61K right now, and I am expecting us to stay above this level when we close this 2-week candle.
So that level is 60,626 on that chart, right?
It is very close to that level. So this was actually just the price when I screenshotted this chart, okay. But that is very close. I think this is right. Yeah, in the mid 60,000s is that level.
Okay, so you're looking for close above that. If we don't get the close above that, then you're looking for the retest of that anytime soon. And that could just mean that we're going to get a longer cycle. But the one thing that I can see for sure is that we haven't had the blow off top yet, right?
Correct. So the other really interesting thing I've noticed is that we have these 2 major impulses. And the first one takes you up to the 1618. Or excuse me, it's the first run up that leads to then the drop back down to the 1272. So we had that in both of these cycles, and then this one here. And what's been interesting is that if you look at just the angle of this price rise, the steepness of this impulse, interestingly, in the last 2 cycles, the second one, the one that came after the break above this blue line, was 5 degrees steeper than the one that led up to the first pullback. And if you extrapolate that out and say that, okay, we're going to follow that and again be 5 degrees steeper, that if you have a top target set, which for me is somewhere above this 2.272, that starts to tell you where you might see the blow off top. Now, if we do come back down and we close below, that tells me that this final impulse, may not have actually started yet until we close a 2-week above this line, and then we'll shift this 60 degrees over a little bit, and maybe that does put us further out. But right now, it is looking like my probability window is mid-December to end of January, maybe even to the very early February. But we'll see what the charts tell us, and if this gets extended out a little bit further. But what you see down here is one of my main macro indicators that I'm looking at. This is the 2-week stochastic RSI, and
Yeah.
we have multiple interactions with this max level throughout the cycles. We usually have one up here around the halving event, and then we have another one here in the mid-cycle or prior to the halving. Then we have another one around the mid-cycle peak, and then we have our last touch here right up at the blow-off top. And we've had the first two in this cycle, and among other indicators, I'm watching for this last one. So I do expect as we get towards the market cycle peak, this indicator will max out. It'll stay maxed, I think, for a little bit of time. And again, these are 2-week candles, so it could stay maxed even for a month. That's why we look at other things besides this. But to expect that we've already topped, before this has reached the critical level, which has never happened in Bitcoin's 10-year history, is extremely low probability for me. So yes, we are still expecting this final impulse.
I mean, it's so obvious. When you look at it as someone who's been here for a while and got experience, it's so obvious. How concerned are you about leverage? So we're looking at the leverage, and this leverage is stubborn. This leverage is not being shaken out. I mean,
Right.
We're not getting mass liquidations. If you look at the liquidations today, you had 220,191 traders leveraged, but in terms of amount stopped out, less than $1 billion, which says that the hands that are getting liquidated are actually the small hands. It's actually retail investors, small investors getting liquidated. These are not institutional investors getting liquidated. In May, institutional investors got liquidated, and we had, I think it was about 3 billion, that number. But now the retail investor is getting liquidated, but there's still leverage in the market.
Mm-hmm. Yeah, no, it's a good question. I mean, look, I think you preach good advice that you really have to know what you're doing to trade with leverage at all. I never do it. I actually rarely swing trade anyway. I'm more of a holder. But yeah, I mean, it's certainly most of retail needs to stay away from leverage, or you really have to know what you're doing with stop losses to be part of it. I mean, the leverage isn't going anywhere, and to be honest, I think it's part of the reason why the market cap can get to these levels, because you're not just talking about spot. You're talking about borrowed money and margin being part of the market cap as well. So it's just part of the size of this market. I mean, on the macro scale, truthfully, I don't see it really affecting the cycle behavior. I think what it's going to do, it only compounds the inherent volatility of crypto that already exists. It's probably going to give you bigger intraday and intra-week swings, but the candle closures and the macro trend of the cycle, which is just astonishingly systematic and consistent across all the way down from $1 million market cap now to $1 trillion market cap, you still see these fib levels being respected at these same points in the cycle, at these same months of the season. So I think leverage is not going to stop the Bitcoin freight train, but I think it's going
to be what actually drives the freight train up. But I think we need to have one shakeout like we had in 2017. TechDev, I know that you do first of all, you're on Twitter. It's TechDev_52. And you also do a newsletter. Tell us about the newsletter. Mm-hmm. We do have links in the description here for people who do want to sign up, but maybe just give us a little bit of background.
Sure. Yeah, thank you. Yes, I'm on Twitter. The growth over the last few months has been amazing and humbling. And I was getting a lot of requests to offer more in terms of content. So I still post, as much as I can, freely available content on my Twitter feed. But I'm now running a newsletter that everyone can subscribe to and become a member for. It's $8 a month to become a member. It's just to cover the time that I put into it, and it gives you access to extra content. So it's released twice a week, 2 issues. They both talk about a Bitcoin top gauge that I've developed using the stochastic RSI and 2 other 2-week indicators that I track that has reached about 100 in the last 3 market cycle peaks. And right now, I think we're about in the mid 70s last time I checked. So it is something that I'm updating on consistently. I give a Monday brief update and then a full Thursday issue where I also talk about the altcoin market and specific altcoin targets and how to rotate from Bitcoin to altcoins after you see the Bitcoin cycle peak, because that's typically when the alts will go crazy while Bitcoin comes up to its retracement level.
So I'm watching the Banter fam ape onto your Twitter. Just it was at 191.3, and now they're going to start aping because they're apes. There we go, 0.7. There we go, guys. You're doing your thing. Altcoins, quickly. We've got like a minute left. Altcoin cycle. You said the altcoin cycle usually starts when the Bitcoin cycle tops. Give us an estimate of when you think we should start looking at altcoins.
Yeah, well, I mean, so if you're holding altcoins right now, I don't think that's a bad position to be in. I'm in plenty of altcoins myself, been holding for a while. I don't think you need to worry about, having to be all in Bitcoin right now or something and rotate at a specific time. If you've been holding, even early this year, but certainly into last year, I mean, you're sitting on some pretty big bags. So I'm not.
What are your favorite alts? You mentioned you're holding some alts. What are your favorite alts?
Good question. I mean, I certainly don't want to seem like I'm shilling anything, but these are projects that I've held for some time and I believe in. I mean, I'm holding Telcoin and I'm holding Veracity, and then those are two. Tel used to be a small market cap. Now it's creeping up there now. Those are some lower cap alts that are doing pretty well. Ethereum, obviously. So yeah, I don't have 20, 30 bags, but those two are ones that have done really well for me. And if you look at their structure, they're heading to some good places. But yeah, I think that so with the what tends to happen is you have this price divergence between Bitcoin and the altcoin market cap. So when Bitcoin peaks, what you're likely going to see is a sharp drop down, and alts are of course going to follow for a bit, but then you're going to get this bounce that is going to be the start of our dead cat bounce. And what you're going to see is as that bounce happens and Bitcoin comes back up, alts are going to outperform it. So you're actually going to see the alt cap put in a higher high while Bitcoin puts in its lower high around its 702 level. And that's when all of the capital tends to rotate from Bitcoin to alts. And then the alt cap has its blow off top, usually 3 to 4 weeks after Bitcoin's. So that's what I'm really looking at to try to time the altcoin market cap. And it also helps you confirm that Bitcoin, in fact, topped when it came down.
Exactly the same as 2017. What I didn't realize is that actually the bounce in Bitcoin is to a lower high and the bounce in altcoins is to a higher high. So we'll keep our eyes open for that. Tech Dev, it's been an honor to have you here, my friend. Thank you for coming on Crypto Banter. You're part of the family now, my friend.
It's amazing. You guys do a great show. I really appreciate you having me on.
All right, Banter fam, let's go and break Tech Dev's Twitter, and then let's go and break his newsletter. There we go. You see, they're aping in. You can see they're aping in 192.3. Thank you, brother. Thank you for all you do. Love it.
Thank you.
See you soon, man.
Thank you, Ren. All right.
See, now that guy's smart. Tech Dev is smart. I don't know if you've been following his Twitter, but that dude is super smart. I hear the bees. There were bees. I heard bees. There were bees. So remember, guys, I said to you that price is the wrong metric to be trading on. And if you are trading on price, then you have got a problem. You are the lettuce for the bunnies. Look at the other indicators. Look at leverage. Look at the fundamentals. Even look at the charts. Look at all of those things before you look at price. If you're trading price, that's where you're making a mistake. And I tweeted something yesterday, and I want to talk to you about this thing that I tweeted yesterday because I don't think we spent enough time on this. If you're investing, the smartest investors actually invest backwards. So price is the last indicator. Then you've got all the other indicators like fundamental news and leverage and all the ones that we've discussed. But you can keep going back and back and back and back in the price cycle. And the smarter you are, the earlier back in the price cycle, you're in the information cycle, you're actually investing. So I tweeted this yesterday. I said it goes something like this: developers, capital, users, transactions, total value locked. And what I should have probably said, in fact, let's do it right now, is here, let's actually copy that tweet and then start a new tweet, which is exactly, so you guys are helping me write a tweet here. So developers, capital, users, transactions, and then let's do this and that, and then price. See, that is the cycle. First, you get the developers and the brain power moving in. Then you get the capital moving in. Then you get the users moving in. Then you get the transactions moving in. Then you get the total value locked or the activity moving in. And yeah, let's actually let's do transactions. Okay, transactions, total value locked, and then price. Now, most of you are trading on price, which is the last variant here. Those who are slightly smarter, what they do before they buy something is they go to DeFi Llama and they say, okay, what is the total value locked on the project, right? That's what the other investors say. So if you're a dumb investor, all you're trading is your trading price. That's the retail investor. That's the letters for the bunny. If you're a little bit smarter, what you do is you go slightly backwards on this metric and you say, oh, let's just undo that. You go say, well, what is the total value locked? So you'd go to, say, DeFi Llama or CoinGecko. Let's quickly go to DeFi Llama. And here we go. So you go to DeFi Llama, and the first thing that you say is, okay, what is the total value locked of the project? And you go project by project, and you look at the total value locked, and then you're seeing if the project is actually getting traction. And you're investing behind the traction of the project, which is much better than investing on a project just based on its price. Okay, now, if you're smarter than that, then what you're doing is you're saying, hey, let me look at the total transactions. Let's look at the activity on the network. Let's look at the transactions on the network. And let's trade based on the transactions on the network. And if you're smarter than those guys, then what you're doing is you're doing what Raoul Paul's doing. And he says, let's look at the number of active addresses and let's look at the growth in the number of active addresses. And that way we can decide which protocols are the best. So remember, if you're a beginner and you're retail, you're trading on price. As you get smarter, what you're saying is, I want to understand how much money people are putting behind this protocol. If you're getting smarter than that, then you're starting to analyze things like the number of transactions and the number of users, right? That's what you're starting to analyze. And then if you're getting really smart, then you're starting to say, okay, where is the capital going? And there are some people, we normally, before we invest in a project, we look at who else is invested in the project. And if the smart capital like Coinbase Ventures or A16Z or Social Capital has invested, we kind of know that we're following the capital. So that means that we're getting in very, 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 very early into projects and into ecosystems. We have no idea what the users are. We have no idea what the transactions are because we're getting involved before there are users and before there are transactions, and before there is total value locked, and before the price goes up. So we're investing with the smart capital. But the smart capital is actually looking at a completely different metric. And all the smart capital is actually looking at the one metric. So yesterday, we had, or actually a while back, we had Tushar Jain on our show. Now, these guys run the biggest crypto fund in the world today. They're the smartest investors in the world. Remember when I asked him a question. Listen to this.
Because people care. You need people to care.
Oh, wait. Hold on. That's on 2-speed. No, I usually listen to things on 2-speed, but you shouldn't listen to things on 2-speed because you may have a blowout.
Don't care. They're going to leave. As soon as things get hard or as soon as there's something shinier out there, they're going to leave. And so I think Solana did that really.
BitBoy, when he listens like this. I'll show you. Like this. And then he goes to there. And then he presses like this. Look.
Is that why Solana is more exciting than BSC?
And when you listen to Bitcoin, you're going to listen on
BSC is an EVM compatible,
because that's how you can learn
Slack modification, very more centralized. Whereas Solana is a whole new brain trust. It's a whole new culture. It's a whole new.
Okay, but let's listen to this on normal.
Yeah, I mean, we looked at all these deals. The intellectual capital coming into Solana is unparalleled by any other ecosystem other than Ethereum. I would say they are on par with each other in terms of the amount of intellectual capital coming in, but Solana is growing faster and is at 10% of the market cap of Ethereum.
So then I guess that you're saying at a market cap of $43 billion compared to Ethereum's, I don't know, $300 billion or whatever the latest number is, you're saying Solana is probably still a lot undervalued.
I can disclose that Solana is the largest position in our fund, and that's because we're quite bullish. And we are specifically looking at the mismatch between what we can tell based on the quality of the teams building on Solana,
you see,
and what the public has seen. Here's why.
The quality of the teams building on Solana and what the public has seen. What he's saying here is what the public has seen is the price. That's what the public has seen. They've seen the price, they've seen the total value locked, they've seen maybe the transactions, maybe they've seen a bit of users. What they're saying is that he's seeing the mismatch between what you're seeing as the public and the brain capital that is flowing into Solana. Chamath said it yesterday. Listen.
I heard a lot of this view at the conference, although obviously you have to take it with a grain of salt because these are the biggest believers. But their view is that Solana over the next year will flip Ethereum based on developer activity.
Based on developer activity. Based on developer activity, Solana will flip Ethereum. Who says that? Smart people say that. Because dumb people and retail investors say Solana will flip activity because of total value locked or because of transactions or because of users. Smart people are saying, hold on, Solana will flip Ethereum because of intellectual capital. That is
real companies being created.
We spend a lot of time actually before we do anything. That's the only thing we've been looking at, and Syndica, Fractal, a lot of the stuff that we've done, DeSo, is purely driven by developer interest. When we see developers in the open source ecosystem building things on top of this stuff, making stuff that's composable and usable by other people and building infrastructure, we don't really second guess that because they are spending the most important currency, which is not monetary capital, but human capital.
Yeah, their time, their skill.
Their time and their skill and their reputation. They can apply to another project, yeah. And so when enough developers, so I've always thought you just follow the developers, and as more and more projects get started, you just have to unemotionally support that. I think the writing is on the wall, which is Bitcoin is gold.
So what are the smart investors saying? The smart investors are saying, start here. Look at where the developer capital is going. Ignore everything else. The only indicator that matters is developers. Now you can work yourself back. You can say price, leverage, fundamentals, total value locked, transactions, how many users, how much capital, or where the smart capital is going. But the really, really, really smart investors invest before any of this actually exists. The really smart investors say that is all we're looking at. And if that is there, then that will happen. You understand? So in the absence, you need to work your way back this investment timeline and say, am I investing in price? Bad decision. Am I investing in total value locked? Yes, but it's a retail transaction. And what you find is if you invest behind total value locked, very soon the price follows and then the whole thing crashes. Because the smart money invested way before you guys. Am I investing on the number of on transactions happening on the network or the number of users on the network? Yes, that's great. You'll beat the guys who invest on total value locked. You'll certainly slaughter the lettuce who are investing on price. But you won't beat the people who are following the smart money. And the smart money is actually following the developers. So if you want to be one of the smart investors, then what you do is you make your investment thesis this. And you watch where the smart money is going. And to that extent, we found this. Hold on, I've got to find this for you. There's a chart that I want to show you. Do I have the chart that I want to show you? It would be quite sad if I didn't have it for you. Okay, this is what I wanted to show you. Developer ecosystem on Solana, closing quickly on Ethereum. What you can see here is you can look at the developer activity, and I think this is GitHub activity. But what you can see here is that Ethereum had this huge spike and continued to rise. Solana had a huge spike and continued to rise, and Solana's activity is actually almost catching up to Ethereum. Now, this is where it gets really, really interesting. And based on this, I've actually made a whole lot of trades today, which change the layout of my entire portfolio. Let me show you some of why I've made some of the trades. What I've noticed is that you've got to follow the brain power. And I know based on going to conferences that the Solana brain power is now growing faster than anything else. And the type of people that are investing in Solana or working on Solana are the smartest people in the world. Then what you're also noticing is that the ecosystems at work have this parabolic growth of intellectual capital. And there are certain ecosystems where the developers seem to have come and gone. So let's look at, for example, here, the blue one. The blue one here is AVAX. It had a spike and it's come down. And now what we need to see is if the smart money continues to build parabolically on AVAX. But one thing that did shock me today was Algorand. you're seeing that the Algorand developer ecosystem is starting to get the developer activity on the Algorand ecosystem is starting to grow quite aggressively. And that could mean that Algorand is actually undervalued based on where the developer money comes in. Now, you're not going to realize these returns in the next 2 weeks or 3 weeks or the next month. But over time, what's going to happen is the users are going to come in. No, go away. Go away. Over time, the users are going to, the capital is going to come in because not much capital is going into Algorand. The users are going to come in, the transactions are going to come in, the TVL is going to come in, total value locked in DeFi or on exchanges, and then only the price will follow. Now, what else do we see here? Which this is what the switch that I made today in my portfolio. Look at MATIC. Look at MATIC. For a big cap, there's not much activity going on MATIC. And that was a fundamental change in mindset that I had. Instead of supporting MATIC, which was a leg 2 where people moved because Ethereum didn't work, there's now a migration to other blockchains. Solana has capitalized on that. Avalanche is capitalizing on that, although I'm not convinced yet by the Avalanche move. I'm starting to see signs of smart people going into Avalanche, but it's not there yet, which is why a very small part of my portfolio is in Avalanche. If it grows, it'll be a big part of my portfolio. But there's another one here that is starting to kick. There it is, it's starting to kick. And it is Algorand. And you can see that there's not much going on with MATIC. Now, I can't get, the Luna chart is not here, but what we can see with Luna is that in less than a year, the Terra ecosystem went from only a few projects like Anchor and Mirror to nearly 200 projects. What we've got to verify is how many different developers are building these projects. Because if it's one developer, like Terraform Labs building these projects, then that's not good. But I don't think so, because I've had a lot of calls with a lot of projects, and the indicators that I've got is that there are a lot of people building on Luna at the moment. So that is how the smart money make their decisions. And you got a call to make now. You got a call to make now. When you invest, you can invest based on price volatility, or you can work your way across this cycle to TVL, transactions, users, capital. And if you're really, really, really fucking smart, then you'll follow the smartest money in the world and you'll actually invest where the developers are going, not knowing anything about where capital is going. Because these are just affirmations. If you see developers and then you see capital, you say, okay, well, developers are there plus capital. Okay, you know what's coming up next. But if you really got balls, and if you really want to spend time, then go and spend time and see where the real developers are building. And then invest, and then let all these other investors follow you. And remember, guys, if you are investing on price, you're the letters. If you're investing on total value locked, that is a very short-term investment, because total value lock, then price will follow, and then everything usually comes down, or it comes into equilibrium. And you don't want to be those guys. You don't want to be the lettuce for the bunnies. Got it? Amazing. Okay, so now you got it. You got it. Amazing. Everyone's got it. Great. I do have to channel sponsor, put up the Unstoppable domains. I have to issue an apology to Unstoppable domains, because I said that you could buy .eth domains on the Unstoppable domain and you can get the airdrop, and that's not true. You can't buy .eth domains, and you weren't eligible for the airdrop. So forgive me if you did trade on that. It was a mistake on my part. So apologies for that. I'm retracting that statement, officially retracting the statement. I've retracted the statement. I will see you guys again tomorrow. Remember, if you are around, join us in Miami. Go to the link in the description. Come and meet us there. Let's have a big banter bash. See you again tomorrow. Or before that, if I am going to start deploying money, but I don't think I'm going to start deploying money yet. I'm going to wait for that leverage. I'm a smart investor, much smarter than trading on price. That's for sure. See you tomorrow. Until then. Vegans.